Hey guys, welcome back. If you logged into your portfolio or if you looked at the stocks that you own, you're probably wondering one of three things related to the memory sector. Is this trade done? Has it peaked? Or is it completely broken in one way or the other? And guys, I want you to know, if you feel that way, that it is completely normal. I felt the same exact way, particularly looking at the price action that we've seen in this sector strung together over the last few days. We saw Micron drop by 10% again today. SanDisk down by 7%. And when you see a few days like this, like the level of price action we're seeing right now, it makes you wonder if Wall Street knows something that we don't know. So in tonight's video, I want to deliver a completely unvarnished breakdown of the memory sector, because in my opinion, Wall Street isn't selling because demand disappeared. Wall Street is selling because the current sentiment is worried that the memory trade may have reached its peak expectations. So we're going to do four things in tonight's video. I'm going to break down the mechanical, macro, and fundamental forces behind today's brutal action. Second, I want to address the fundamental paradox out there for all of us just to think about, because that paradox is, when we have great companies with record margins, why do they continue to fall during a liquidity squeeze? I want to lay out the institutional bear case with a total analytical honesty and introduce exactly why short sellers are pressing down on this tape. And then I want to pivot. This is the most important part of the video, guys, because I want to introduce what I'm calling the Seagate Differential. I want to show why Seagate stock is surging right now. We're seeing massive number of new price targets for the stock, where it is giving us, we're showing significant demand across the data sector right now. And in my opinion, it is a signal that I think can give us conviction across the entire memory trade, or at least it's giving me conviction. And then finally, there's also something that just dropped on the street that is moving, I think is going to move the shares positively tomorrow as well. It's another sign, a huge signal for the sector. So make sure you hang in there to listen to those two. Maybe it'll give you a little more confidence. Maybe it'll uplift your spirits, because it does for me. And then finally, I'll end the video with telling you the three things that I'm watching tomorrow when trade opens up at 9:30, when that opening bell rings. So let's dive into the tape. If you guys haven't done it though, make sure you like and subscribe to the channel. We've got to get this channel moving back in a positive direction. I know the market has been down. I know some people may not be excited about this sector right now, but let's get excited about what we can learn together, how we can encourage each other, and ultimately make more money together. So hit that subscribe button if you haven't done it already. Guys, let's get into the video. Let's start off with why great stocks fall, even if they have solid or unbelievable fundamentals in the market. Let's tackle this question with a company that we all track on this channel, which is SK Hynix. Because SK Hynix dropped their earnings last night, and they had unbelievable revenue. This company has unbelievable fundamentals. They have margins in the 70+ range right now and a massive order backlog, but yet they're continuing to drop in today's market. So let's talk about three mechanical mechanisms that are causing high quality memory stocks to fall right now in the market. I made a picture to walk through for all of us, but you can see on the screen, we're looking at three areas here. The first one is just around paper liquidity and how it is overriding the physical value of companies right now. When you have major institutional market shocks that are happening right now, like the forced liquidity, regulatory liquidity that we're seeing in the Korean market, or the macro de-risking before the Fed meeting today, sellers must sell paper shares regardless of underlying enterprise value. A risk algorithm or a margin clerk is forced to liquidate leverage positions. They don't care about the enterprise SSDs, the demand for those products, or the HBM yields. They need cash immediately. And until that forced supply of paper shares is absorbed, the short-term price discovery continues to break down. The second one is all around multiple compression and earnings growth. So stock prices, as you know, they are governed by a simple equation. The price is a factor of kind of the earnings and the multiple. So even if Micron and SanDisk's, their underlying earning growth remains incredibly strong, if the market-wide anxiety that we're seeing right now causes the PE multiple that Wall Street is willing to pay, if it causes it to contract, the stock price is going to fall. What we witnessed today was a systematic multiple compression across the semiconductor chips. The stock market doesn't price absolute fundamentals. It prices the direction of change. Great companies can lose half of their market value without their businesses falling apart if investors believe that the best news is already behind those companies. And that's the type of compression that we're seeing right now. And finally, the last piece that you can see on the right is just the rate of change, or the second derivative. So Wall Street does not price stocks on how good the company is today. It prices them on whether tomorrow will be better or worse than they are today. So when memory manufacturers post near record operating margins, Wall Street short sellers begin to argue, can these margins physically accelerate even further? And if the market fears that we are at a peak growth velocity, algorithms price in deceleration, even if the net income stays elevated or if the guidance is even stronger in the next quarter. That will continue to decelerate, and it will cause further compression as well. So you can see on the bottom, paper shock plus multiple compression plus growth acceleration fears all drive down memory stocks price. The stocks will fall, and that's what we're seeing right now in the market. And I want to jump over a little bit and talk about the bear case, because I mentioned in the beginning, I want to give you an overview of the bear case, an intellectually honest overview, because to be a disciplined investor in this market, we have to understand the other side of the trade. And I've gotten a lot of criticism on the channel that I am overly bullish, or I am just like too much conviction in the memory sector. So let's talk about the bear case a little bit. First, let's jump over to SK Hynix. So I'm going to go back there because I want to show you a couple of factors. One, we know what their revenue was that they dropped for Q2. We have 79 trillion yuan, 250% year over year. We're looking at 51% quarter over quarter. And on top of that, we are seeing record operating profits. You look here, you can see operating profit below, operating profit margin of 76%. Those are record numbers for the company. But in the bear view, they will look at this and say, in a commodity hardware, when you're seeing record operating margins that hit that type of mark, that's not the start of the bull run. That is the mark of the absolute ceiling of pricing power. When DRAM average selling prices jump by 30%, and NAND average selling prices jump by 50% in a single quarter. So the bears would look at this and say, we are at a peak in this sector. We are at a peak with this company overall. The second piece we'll look at is, we know Lam Research, they just dropped a strong earnings print on the market today. You can see their Q2 revenue was 6.72 billion. It was actually up 15% sequentially, 30% year over year. But the bears will look at this and they will tell you that with Lam Research crushing their earnings with that 6.72 billion in revenue and guiding even higher for the next quarter, they'll argue that when foundries frantically buy fab equipment, it guarantees a massive structural supply glut that we will see in late 2026 and in 27 that will destroy contract pricing power. That's the bear argument on that piece. And the last one, I think we'll also jump to an earnings today, which is Qualcomm. Qualcomm fell today. The stock dropped on the weak fourth quarter earning guidance. So from a bear's perspective, they'll say, listen, Qualcomm missed their earnings per share forecast tonight. The stock is sliding at that in the after hours. It was sliding at 7% last time I looked. It could be more now. But this is an explicit warning of unprecedented memory cost pressures impacting smartphone original equipment makers. Bears will say that high memory costs are destroying consumer demand in headsets and PCs, which will force inventory pileups. So they'll look at those signals. To me, we'll look at them differently, but I look at them a little differently than the bears do. But that is the bear case. And guys, it's a serious case right now in the market. It's a coherent thesis. And if we're being honest, if any one of us were running a multi-billion-dollar hedge fund today, we would seriously consider and we would seriously listen to every one of those arguments. However, I want to make the pivot in this video right now because I want to show you why the physical hardware data proves that the bears are fighting the wrong battle right now in the market. They're not paying attention to the right signals, in my opinion. Because first of all, the bears are trying to apply a standard 2028 or even say the 2023 cyclical memory playbook to an AI infrastructure build out that has zero historical precedent. And I want to jump over and show you and make the case, which I'm calling, I said, the Seagate differential. First, look at Seagate. It differentiated itself from all the other memory titans today. It actually drove up over 2%, $17 on the board today. And look what we're seeing in the after hours. Guys, this is a bit of a different story. Because when you see all of the other memory tickers that are bathed, they were just bleeding today. We saw Micron down by 10%. SanDisk was down. Western Digital, I think, was down. SK Hynix was down. But Seagate was the different. Actually, I think Western Digital might have been up. Let me just check that just to confirm. And that would make sense, but let me confirm. Down by 0.3 today. Up in the after hours right now. But they were all down. But yet, Seagate is operating differently. And what's even more interesting is we saw after their earnings last night, look at all the new price targets that flooded the stock. We have everything from $1,000 up to $1,400 a share from Rosenblatt. The stock right now has significant upside potential from where it's trading in the market. We're seeing JP Morgan maintain to buy. They've raised their price target to $1,240. Wells Fargo maintained a buy, raised it to almost $1,200. Bernstein maintained buy, raised it to $1,350. Rosenblatt, $1,400. The consensus average for Seagate right now is over $1,000, about $1,020, a 33% upside. So a skeptic would say, Kevin, this doesn't mean anything. Seagate makes HDDs, Micron and SanDisk, they make, DRAM, HBM, NAND. So how does Seagate prove anything for memory? So let's walk through a couple things. This story was on DigiTimes, and then I want to take you over to just reinforce the architecture around memory and why this differential signal is everything we need to see. But first, take a look at this article. What Seagate's blowout quarter signals about the next 2 years of AI infrastructure demand. If we go through, it says, for supply chain watchers, the more important story is that what the results reveal about where demand is heading, who is driving it, and how the hardware ecosystem needs to prepare. It wasn't just about the earnings. So first off, customers are locking in further out than ever. So this is the clearest demand signal from the call for Seagate. It is not how far customers are committing. Seagate said the vast majority of their nearline exabytes are already allocated into 2028, and that customers are actively seeking to extend planning horizons through 2029 and beyond. Their CEO went on to say that Seagate is not seeing customers pull back on planning horizons. That kind of forward commitment covering both product configuration and pricing points to sustained infrastructure build-out rather than a cyclical surge. We're also seeing NeoCloud and enterprise join the fun, jumping at the table with the hyperscalers. Seagate said enterprise nearline revenue grew for a 5th consecutive quarter, and that NeoCloud operators are leading model developers and are now actively adopting tier strategy architectures. If we go further down, we'll say AI is rewriting the storage demand question. Seagate made a pointed argument that AI is not just adding to storage demand, it is compounding it in 2 ways. First, the agentic AI workloads, and second, the physical AI, so the robotics and the autonomous vehicles. What their CEO said is neither of those 2 factors is a major contributor yet to exabyte shipments, but both are already influencing how Seagate's largest customers plan their infrastructure, and by extension, how far they are committing out. Finally, we're seeing the price per exabyte grow by 10% year over year this quarter, and the September guidance implies a growth closer to 20% year over year. And let's jump over, like I said, I wanted to reinforce why this is such a great demand, because guys, we have to remember that it's not built in a vacuum. There's that question I put up top again from what the skeptics would say, what the bears would say, that HDDs have no impact on NAND, SSDs, DRAM products. But here's the reality. This is why the demand signal, why it doesn't apply only to HDDs, because it confirms the entire multi-tier storage chain. We know that modern AI data centers use tiered storage. They have everything from tier 0 to tier 2 and 3. You can see on the left is the AI cluster that has the GPUs. Tier 0 is HBM and DRAM. It sits at the GPU. This purpose of this, as you know, is the highest bandwidth, the lowest latency. It's used for model execution, training, and inference. This is where Micron, SanDisk, and SK Hynix sit perfectly there. Tier 1 is the high-speed enterprise SSDs. This is for high-performance storage, for active databases. We're looking at for training checkpoints, vector databases. Guys, this is where we're seeing SanDisk, Micron, and others that build these enterprise SSDs sit. And then finally, tier 2, 3 is the HDD level. Seagate, Western Digital sit here. These are massive scale, lowest cost per terabyte, used for raw database, data lakes, and backup archives. But the reality is strong demand for HDDs in that tier 2 to 3 level is a confirmation of broad system-wide storage investment across all tiers. You cannot build out tier 2 and tier 3 HDD storage without simultaneously scaling tier 0 and tier 1 SSDs. It is all working together, guys, and that is the signal. That is the Seagate kind of differential that I wanted to talk about tonight. Is the signal, I think, that should confirm to us the conviction we have in this sector, even though things are bleeding right now and it doesn't look good. Guys, the reality is that is the price of admission into this trade. But this here, in my opinion, for me, gives me conviction, realizing that it is not going away. What we're seeing with Seagate right now is going to spill over into the other stocks. They're going to act like a coiled spring when we get through all of this forced liquidity in the market. And let's take a look at two more signals today from the earnings overall. First, let's go to Microsoft. Because, guys, it's kind of interesting. If you remember back in last quarter, remember, Meta was the belle of the ball and Microsoft was down. It's a bit of reverse right now. Everyone's loving Microsoft and all the pressure is on Meta right now. But essentially, Microsoft surged after hours on strong revenue outlook and maintained their CapEx guidance. That's what we needed to see today. Real quickly, I'll go through. Their CEO said they have 31 new data centers have been added across 5 continents, bringing a total of 88 this year. Their CapEx increased 70% year over year to $41 billion, and missing the estimates. They're actually a little below what Wall Street was thinking. But the rise is largely to support customer demand for cloud and AI offerings, with roughly 2/3 of CapEx for short-lived assets such as central processing units, so CPUs and GPUs. And if we go through these, this is the most important piece from their earnings, is the Azure cloud computing services jumped 43% year over year, beating estimates. And we're also seeing that Azure, the revenue surpassed $100 billion for the first time. Microsoft 365 Copilot reached over 30 million paid seats, reflecting confidence customers are placing in the power of Microsoft and their AI transformation. So Microsoft performance showed exactly what investors were hoping for, that strong Azure growth alongside evidence that AI demand remains robust. Now, if we jump over to Meta, Meta is a bit of a different story, and they're getting crushed right now because you can see Meta sinks after Q3 revenue forecast misses. Now, there are some reasons for that. We'll roll through really quickly, but their shares tumbled 8% in the after hours because they missed. You can see the company posted second quarter revenues miss and the forecast third quarter revenue was below expectations. They reported a 14% decline in second quarter profit on Wednesday compared to year over year. The company did report an earnings of $6.18, missing the estimate of $7.17. The big piece here is really the expense line for Meta. We have to remember, you can see total costs and expenses jumped 55% to $42 billion, including a $2.4 billion legal charge and almost a $1.2 billion in severance costs related to the May workforce reduction. But there are a few things in here I want to call out, probably right here, when Zuckerberg said that artificial intelligence is accelerating the company's core business, powering new products and opening up enterprise opportunities, adding that the benefits are already becoming evident. So that's a strong sign of the build out and the importance that Meta is putting on it. We're also seeing that their negative free cash flow didn't go negative. It was just below $1 billion. It is a big drop, though. If you go down here, you can see Meta spent $31 billion on CapEx expenditures during the quarter, and it continued to expand the AI infrastructure. Their free cash fell sharply to $784 million. It's not in the negative like we saw with Google, but it is significantly different than we saw a year earlier when they were, $8.5 billion. So the company narrowed its CapEx outlook. So originally it was 125 to 145 billion. They actually increased the lower end. So they're narrowed it from 130 to 145 billion, but they didn't mention anything about slowing down. So that's a strong sign for the memory sector as well. And then real quickly, if I go through the other earnings that we saw today, just across the board, we saw Vertiv. Vertiv is a long-term bullish story because they raised their full year guidance. The AI demand pipeline remains strong. We see Silicon Motion today. They were bullish as well. Enterprise SSD controller and demand was healthy. We look at Qualcomm. That was the mixed one today. They had smartphone demand. It remained soft, and they mentioned that it was all related to memory costs and kind of it pressured the headset business. Finally, we look at form factor. We know that they did the high bandwidth testing and probe cards. They had strong earnings. It's a bullish sign for the sector. So strong demand for advanced packaging solutions that we're seeing from them. And finally, Lam. Lam was a strong kind of bullish sign as well. AI-driven wafer demand is accelerating. They beat expectations, raised their guidance, strong HBM and advanced memory spending right now. So what we're seeing across the board is 4 strong signals out of the 5 reports that we're seeing here. The lone area of weakness was related to smartphones, not AI infrastructure or advanced memory. So let's take a look at what Micron is doing in the after hours. Like I said, there was another signal. So we know we're down by about 10% today, $81. We're up almost 3% right now, trading towards $7.60 a share, all because we saw Samsung drop their profit today on the street. Remember, we talked that we needed to keep our eye on this one to see all the details. This is the full report that was being dropped today. Samsung's Q2 profits surged on AI-fueled memory demand. So we're seeing revenue jump to a record high of 171 trillion won. The strength in Samsung's memory chip business largely offset a weaker performance from its smartphone and electronics division. It expects global memory market to remain undersupplied despite softening demand in the customer electronics and PCs. And despite efforts to increase production, what their CEO is saying is that supply constraints are expected to continue. So another strong signal overall for the memory sector. That's exactly what we're seeing right now in the price action, in performance that we're seeing with Micron in those after hours. So guys, that's what I had today. That's what I wanted to run through. What we're seeing tomorrow, what I want to keep my eye on. Obviously, we're going to have Amazon. We're going to have Apple earnings. They're going to be incredibly important for us. We have to keep our eye on Amazon Web Services. It's the largest cloud provider in the world. If Amazon Web Services shows accelerating cloud growth and maintains an aggressive CapEx expansion for the data center builds out, it will provide a strong signal to the memory sector. Apple as well, we just have to keep our eye on them. Qualcomm said it today that they're seeing weakness, that the soaring memory prices are squeezing the smartphone manufacturers. We know Apple may come out and talk about different ways to compress memory, so that could have an impact on the sector as well. Those are the 2 things I want to watch. I also just want to keep my eye on that institutional support. We saw a significant amount of block trades today, right at that 730 level for Micron. So if we can hold that level at the open, get through that first 30 minutes of volatility, I think that the support that we're seeing, all of those block trades at that level, all of the positive signals in the market, we have a chance, hopefully, to get this stock moving back in the green. And then if we can layer on top strong report from Amazon, maybe we can continue to see that momentum positive on Friday as well. But guys, in closing, I want to say that we all know that investing through the structural technology shift that we're seeing right now is never a straight line up. Volatility is the price of admission for high beta sectors like we're in the memory sector right now. I also want you to know that I care very deeply about this community, about this channel, and I will always work hard on your behalf, and I will always continue to bring you the hard data, the transparency, the truth, and I will do that over comfortable narratives any day of the week. But I want you to know that I'm thinking about you. I feel all the pain just like you feel, and I probably even feel it more because I feel like I have this obligation to this channel that I want to continue to meet. I really do love this channel. I love the engagement we have. So let's keep it going. Don't let it that early morning volatility that we may see throw you off. The real directional vote that we'll see in this sector is going to be on Friday. Let's see what Amazon drops. Let's see what Apple drops after the closing bell tomorrow. But let me know where you stand in the comments down below. What was your read on today? What do you think about the signals? What do you think about that Seagate differential that I made, the case that I made there, and the signal that we see with Samsung? Samsung. Is your conviction as strong as ever, or are you still a little bit rattled by the price action we're seeing right now? Let me know below, but I hope you have a great night, and I'll see you in the next one.